of January. I hope you all had a good weekend. I'm sure you all probably got wind of the major news flow that occurred over the weekend. I think it was very hard to miss it. But Donald Trump, again, first and foremost, we'll have to dig into that because that's what's had the biggest underlying impact on the market open overnight in Asia, and then the corresponding price action seen this morning. And the headline being that Trump's executive order to halt the entire US refugee program for 120 days, banning all Syrian refugees until further notice, and suspending entry for nationals from 7 Middle Eastern and African countries for 90 days. That was the initial headline. So countries such as Iran, Iraq, Syria, Libya, Sudan, Yemen, Somalia were the ones in focus. And just first of all, looking on the broader kind of asset class mix that you can see on my charts that I'm sharing, the initial interpretation of this is immediate risk off. This was the Asian Open on the back of the severe backlash that it was met from global leaders, other political figures of note, corporations globally, you name it, they all came out and spoke very negatively about the latest decision from Trump and his team. Initial reaction then was quite a strong gap lower in the US dollar on the back of this kind of protectionist angle and what it might mean for Trump going forward in trade relations and so on, in his political popularity we'll talk about shortly, which is plummeting in terms of his disapproval rating is soaring at the moment. So really two moves that we've had occur. First of all, that dollar weakness prompted, you can see top left, the euro dollar was moving higher during overnight Asian trade. Cable likewise on the dollar weakness. Cable got up to highs at that R1, briefly sitting above 126. Gold was rallying. Stock futures at the reopening, you can see the S&P on the right here gapped down. So as such, Europe and the DAX has followed suit, and the DAX is selling off at the moment. The DAX actually is going to be a big story today because the inflation figures this morning have come in, and they're particularly strong out of Germany. So unsurprising to see a bit of more downside pressure here in the DAX. And then in Bunds, we were also we've got underway and some pressure here, and we'll look at that German figure again in a moment. So the initial reaction was risk off, but what we're seeing now as Europe has come in is the dollar index has closed a gap on the significant move lower seen at the reopening of trade, and as such, likewise, we are trading in both major pairs lower than where we were when we gapped up in the overnight trade. So it's been a reversal in the FX currency pairs of that move. Gold as well as reversed, and some. We're down now to flat on the session, sitting just above pivot at 1192. And then obviously, as I said, these equity indices still under a bit of pressure. The DAX in particular, though, which is slightly on economic data already out this morning. But just sticking with Trump first, let's have a bit more of a closer look at some of the details here and why we've had a bit of a reversal. So a couple of headlines to quickly run through. First of all, Donald Trump has backed down on green card immigrants. So the president has decided to allow green card holders from Muslim countries targeted in his extreme vetting program to enter the US. So that's in the first reversal that he unveiled from his controversial immigration policy on Friday. In addition to that, Donald Trump's administration tried to clamp down on the growing row over its migrant ban. It issued clarifications on Sunday evening that the policy would apply to fewer than expected dual nationality Britons going to the US. You can see here, obviously, is Mo Farah, or I should say Sir Mo Farah, who was one of the kind of more higher profile celebrities, if you like, to come forward, given his dual nationality, that he's Somalian and British, and would be someone who has been living in the States for many years as part of his training. And there was a big kind of, the press caught hold of that story as one of the main headlines. But really it was Boris Johnson, the Foreign Secretary, met with the President's advisors, and the Foreign Office issued that fresh guidance, making clear that only British citizens travelling directly from one of the 7 affected nations, so you had to be coming directly flight out of one of those 7 nations, otherwise they would be fined. Obviously, interesting to see then that Egypt, Saudi Arabia, Turkey and the UAE weren't on the list of the 7 that Trump was banning, which is, if you're talking about trying to counter terrorism, then I'm sure you'll all know that that's pretty ridiculous, really, for a number of reasons. One being that even if you were to look at most domestic-related large-scale incident, obviously 9/11, 15 of the 19 hijackers involved were from, of course, Saudi Arabia, which is not on the list of which he's targeted. The other making up of other terrorist nations, you'd be looking at Egypt, UAE and Lebanon when you're talking about those that affected the US, none of which are on that list. Obviously, Saudi Arabia has a very special and unique tie to the US in regards to its positioning, in regards to its oil capacity. There's obviously relationships there that need to be kept. And then with Egypt, that carries a great significance actually within that region for military purposes, given its location, and also the Straits of Hormuz, where there's a large amount of oil also going through a very narrow passage. So, it's to look at what Trump's done here, it's not too difficult to see why it's been condemned so aggressively worldwide. The other thing as well that he did say, which I caught at the weekend news, was that he's issued a eradication of ISIS in 30 days. Why didn't I think of that if it was that easy? 30 days, let's just get rid of ISIS. I'm sure that's what everyone's been trying to do for the last decade or so, but good luck with that one, Donald. Anyhow, enough of my view on that. You can obviously tell how I feel about the news, but I definitely think that from a more practical point of view, something to be mindful of potential news flow that you might hear is sorts of things like this. Canadian PM, there was a mosque attack at the weekend. It killed 6 people, 8 were injured. Basically a gunman entered a mosque and shot a group of people in worship. I would imagine that what Trump has done here is only likelihood is he's going to incite more conflict, I would guess, between the Muslim communities and the rest. And so actually part of the news flow I'd be looking for is potential counters from the Islamic State, potentially high increase of terrorist attacks in the Western world as a response to this, I would say, is not surprising. So I would just be mindful of hearing potentially those types of situations occurring in the coming days and weeks, given this political kind of angle. What this actually means, though, from a Trump point of view, there's a couple of things to have a look at. So Trump's Gallup approval ratings, Gallup's kind of the main body that compiles the approval ratings for the president, and these are the changings over the first 6 days. So his approval rating basically has dropped 8 points in the first week. To put it in a bit of context, Trump's at 50% disapproval rating. If you look back to other presidents of the United States to get there, it took Barack Obama 579 days, Bush 1,200 days, Clinton 152. That was probably the next shortest. It's taken Trump a week. So let's see how he gets on this week. Obviously, he did an awful lot actually in his first week. The pipeline, the Keystone pipeline, the border taxes, now the latest immigration. He's definitely following through with a lot of the headline kind of campaign pledges. But obviously, what ultimately will come of what gets fully put into place might be a different thing, and certainly this whole fiscal side, which we have not heard as yet, will be very interesting. Other things as well that you've probably seen: prevent Donald Trump from making a state visit to the United Kingdom. Well, you can see that shooting up even as I'm talking. It's nearly hit 1 million signatures now, and although the government this morning, the UK government, will not withdraw its invitation for Donald Trump to visit the UK, This comes despite the million almost signatures that we've got. Now, this is now when, for me, it starts to make sense about the cable short this morning. And from my point of view, and I'll explain that, is because obviously you had the special relationship. I'm sure you saw the photos of the press managed to get a very good one of Donald helping Theresa down a step at the back of the White House, and there was a kind of classic photo of them holding hands with the title Special Relationship. And as soon as this immigration kind of ban came up on Friday, one of the first things that the press were asking when Theresa May then went to Turkey at the weekend was, what do you think? And she didn't say anything. She was very cautious. She backed off giving any direct answer until actually pretty late on Sunday, when she kind of condemned it with the other Western leaders. But what this means for me is that actually, the whole point of Theresa May meeting with Trump was to be right at the front of the queue in order to show a strong hand, not so much with the US, but this is for the whole Brexit play. And if I was about to enter a negotiation period, which we are in Britain, with Europe, which is currently at its most kind of standoffish point of where we are in the process, I would want to send a strong signal before triggering Article 50, and what better to meet with the biggest nation on the planet to be talking about front of the queue in trade talks, to then go back to Europe and have a stronger hand to deal. What's happened though is that the biggest risk to that strategy for Theresa May and the government is Donald Trump being Donald Trump. And what he's done with this immigration is completely would have gone against what May's objective would have been. And actually now, I feel as though she's going to be under immense pressure, given this relationship that she's struck up, and wanting to be close to such a character and policies such as the Trump administration. That's only going to be met, I'd say, more aggressively by our own domestic parliament and parliamentarians. This, of course, comes with this week tomorrow's House of Commons debate in the UK on the government's draft law to trigger Article 50, debate of which will last for 2 days. Now, they're already talking about the fact that the Supreme Court made that ruling last week about they will have a say on the structure of the triggering of Article 50, then also the shape of the final bailout package. Now Theresa May's under even more pressure from this new angle, from getting into bed with the devil, so to speak, in terms of how many are seeing it. I think it's going to be extremely tough for Theresa May to maintain this hard Brexit stance. And so, again, actually, I think looking at cable this morning, you had a potential classic opportunity there on cable. I think that would have been, for any of those who were into that trade, a very viable short there. Because ultimately, as we've just discussed, a lot of the immigration ban that Trump's tried to push through has already been reversed to a certain degree. You've also had various other stories circulating about lawyers have already, and judges tried to put a block on it in certain degrees. So it's been watered down already. The dollar's pulled back, it's closed the gap, and for me, ultimately, I think Theresa May, through the fault of really playing a bit of a chance card in using Trump relationship as a positive hand for Brexit negotiations, has kind of backfired given what Trump has done at the weekend. So the cable short's definitely in play, and the euro at the moment just being held up on that pivot level. Just going back though, looking at the DAX, and actually I want to have a quick look at the DAX and the Bund, because there's been quite an interesting development and something you guys may not generally be on your radar quite as much, given the kind of broader context of being focused on Trump. But you've had German state CPIs come out this morning. The only one that we've seen so far is the German state of Saxony. Now that came out at 2.3% year on year. The previous was 1.8%. So German inflation is definitely something which the market is watching very closely. Of course, this comes in the context of the ECB making the decision to, yes, reduce purchases on a monthly basis, but we're still looking at 60 billion euros. and we're looking at that over a longer extended period to the end of 2017. Now, the interesting thing here to look at is the two European asset classes is the DAX here at the open. So that data came out at 8 o'clock. And I want you to look at the DAX and the Bund and the way that different traders looking specifically at these asset classes are reacting to this data, because I think it will become, though, more uniform if inflation certainly starts to follow this continued upward trend. Now, looking at the DAX, 8 o'clock. So let me just highlight the period of where 8 o'clock was, which was here. And then 8 o'clock in the Bund, which was here. Now, higher inflation, certainly if it keeps moving as rapid as has been evident in recent German data, in CPI, PPI, aside from the state level regional readings, would be that the ECB might need to back off. That word of ECB taper might need to be brought forward, and actually, ultimately, you might need to get more aggressive in cutting back your quantitative easing program, either the size or the duration, in order for the fact that you don't let inflation start to run away on the upside. Now, that, if you look at the Bund here, we actually moved from around 161.80 to 161.32. And for any of you who trade or have looked at the Bund, that's a pretty big aggressive move. I mean, the immediate reaction in the Bund on the data release, we fell from around 61.80 all the way to 55 in a straight line pretty much. That's a minute candle you're looking at. We then gravitated for a couple of minutes and bang, we shot lower again. So the entire move, you're looking at around 40 ticks or so in a matter of minutes. The DAX, though, is not so clean cut in price movement, and I think this is the markets kind of trying to digest what it is that they're hearing. Now, you had what looked like at the cash open a little squeeze higher above those highs seen from overnight. The market looking to potentially close the gap from the Trump news that we've seen from the futures open, and then the data's come out, and obviously if you're talking about an ECB taper, that most logically then would be an equity negative, because you're going to have to remove a more accommodative policy quicker than anticipated. So reduction of QE would be a net negative for equities. Then we sold off for a couple of minutes. Then we rallied again, had another look at those highs. Before now, you're starting to see a more definitive downward trend, which I think totally makes sense in the context of those inflation readings. And obviously as well with the Trump developments. But quite interesting to see then, you've got actually two asset classes. So rather than, when I look at these two charts, the DAX and the Bund, rather than focus on the Trump news, what you're looking at here is yields rising, so Bund's under pressure and equities under pressure. This would suggest to me then that this is an inflation play happening in these two assets. If it was a Trump play, Bunds would be higher, you would imagine, with equities lower. So definitely quite an interesting development there that might be happening. You're not going to hear that kind of story talked about probably in the main media. This is very much a more financial markets move, but certainly something worth keeping a close eye on is these inflation readings as they come out this morning, because you've got the other state of Germany to follow. Okay, moving on. A couple other stories quickly I just want to show you. For one, there's a headline out of Goldman Sachs this morning. I'm sure you might have seen it. But they're looking, Goldman's, at European stocks returning to double US peers in 2017. So European equities, they're suggesting, will catch up with their US peers once the uncertainty surrounding near-term elections is lifted. They're saying they will return 8% in the Eurostoxx 600, including dividends by end of 2017, boosted by a weak euro, strong global growth and recovered oil prices. So this is quite interesting, because essentially what they're saying is that they're going of the view that actually will go through these European political hurdles very much centred on the first half of this year. Once we go through the French elections, the Dutch, the Brexit situation gets underway, actually it's more about the Trump risk than it is about the European political risk. And at the moment, there's quite a strong divergence between US equities still being close to all-time high levels, where there's some relative value to be found in European equities, which once they get over this political hump, might then start to play catch-up and outperform. I can see that as a play. Certainly it's, I'd say, comes with its own risk in terms of holding that view. But Goldman's underweight US stocks over the 12-month horizon and actually looking quite bullish European equities, just something for the longer term. Elsewhere, other things to quickly look at. Let me just flick to OPEC. The story hasn't really been too much in the way of new OPEC-related news. But why I wanted to show you this was that we've been always talking about the fact that OPEC have been very forceful in convincing investors that its oil output cuts are real by following through with the cuts. And what we've seen here is that money managers are their most optimistic now on WTI crude prices in at least a decade. So Saudi Arabia have said that more than 80% of its targeted reduction of 1.8 million barrels has now been implemented, and oil shipments from OPEC are plunging this month, according to Petrologistics. This is one of the main tanker trackers. So you can see here on this chart, actually net long positions in crude are now at all-time record longs, are at their all-time highs. So when we're talking about our underlying kind of more bullish view, that is replicated in the market's positioning when we're doing these daily strategies that you probably look at when we're looking at the balance of where we lie in a market that's really a degree of a lack of news flow at this point. Just one other thing, just quickly, I've just seen flash up on one of my other news feeds. And the reason why I'm going to try and bring this up is because Bunds, again, just looking to test lows on that S2 level at 61.32. Again, I really think this is an interesting trade this morning. French 10-year bond yield just hitting its highest since 2015. Again, inflation really creeping up on the Eurozone here. Government bonds dropping while Eurozone inflation levels and French election race heats up. What you've had here on the French side, yields on the 10-year French debt have now hit their highest since 2015, rising another 5 basis points this morning after the country's ruling Socialist Party elected a hard left MP who supports universal basic income and tax on robots as its presidential candidate. So there's that situation ongoing. German-led but higher European inflation, European yields moving to multi-year highs now, and that's definitely playing out this morning in the market. Okay, other charts just quickly to have a look at. Sam North, our senior market analyst, was looking at something this morning. He was just pointing out to me the interesting level that the FTSE future and CFD were trading at this morning. He was looking at, I'm looking at the CFD here, so this is the UK 100. You've got that October last year, the high from the beginning, this is when the pound, if you remember, fell. That was the October the 4th was that Tory conference and the issue of hard Brexit, when the pound dropped through a significant technical level downside. The weakening pushed the FTSE up again, and that level there just being tested on the 23rd of Jan, so that was last Monday. We've just had a little look or a peek below it this morning. So quite a significant technical level being tested in the FTSE. I think it corresponds in the futures as well from SEP levels or October levels, so just keep an eye on that if you have access to it for the live guys. Elsewhere though, looking at the move in the S&P, despite this gap down, I think you do have to put it in a little bit of context and where we were from last week. I mean, this is the beginning of last week, and when we broke out of that extremely tight range that we've had back end of December 2016, beginning of Jan, broke higher on the pipeline news, the Trump kind of action that he was taking. Now he's kind of looks like he's overstepped the mark with this immigration move, but in context, we're still highly elevated in the US equity market. We never really quite in the futures had a firm move on that 2300. You can see that peak price there mid last week, just shy of it. But we've only really retraced about a third of the actual up move on the back of this immigration play. So by no means has it been a big sell-off. And certainly these are some levels here possibly to be keeping an eye on and any further pullback going forward. Okay, calendar-wise, let's just have a quick look what we've got on the docket for today, coming up 9 o'clock shortly. So I'll just look to wrap up. We've got the other German state CPIs, so just keep an eye as I'm talking on the DAX again and the Bund. Then looking later on into it's the afternoon, you've got PCE numbers coming out, personal income spending from the US, and pending home sales. But just quickly to look at the week as a whole, one thing to bear in mind, Asian markets, we've got the Chinese New Year obviously occurring, celebrations over the weekend, but their market is closed in mainland China all the way through Monday through Thursday. They're not back into the market until Friday. So you might have lower volume and liquidity overnight sessions. That will probably also play out any of you live guys trading things like the Aussie and the yen overnight, so be aware of that. Moving on though, you've got the Bank of Japan policy interest rate decision, outlook and statement coming overnight tonight. You get it's quite a busy week overall actually for economic data, so keep that in mind. You've got the German retail sales report tomorrow morning, money supply, mortgage approvals from the UK markets on Tuesday, but importantly you've got the flash CPI estimate. That will be closely followed given what we've seen from the German figures this morning. That's on Tuesday. And then you've got Chicago PMI, ECI, consumer confidence in the US on Tuesday afternoon. Wednesday, you still, despite the holiday, get some Chinese data, manufacturing, non-manufacturing. It being then going into beginning of February, you'll also get the various countries' manufacturing PMIs. And then, of course, leading into non-farms on Friday, you'll get ADP and the various other jobs data coming out of the US in the run-up to the BLS figure on Friday afternoon. Thursday, this has gone quite quietly on the calendar, but you've got the Bank of England, not just the interest rate, but the quarterly inflation report. And actually, let's just have a quick look at that. The quarterly inflation report, so this is what economists who've been surveyed by Bloomberg are looking at, and they expect the Bank of England to raise its near-term GDP forecast this week. So for 2017, you can see here, almost 90% of economists are expecting 2017 growth to be upgraded. And then looking at 2018, obviously not quite so much. Most are looking for unchanged, but certainly for this year, I think the Bank of England, when they last issued this, would have been November, and back then probably the way that the economy so far has played out in the UK has not been as bad as they thought, hence this near-term upgrade that they'll have to put into play. Interestingly though, of course, will be inflation, which has been on the rise as well, and is becoming, if anything, the pace of increases has picked up amid the kind of weakness of the pound. So this is when traders will be looking to see what is their forecast for that, how quickly do they see inflation rising over the 2-year horizon, and net, how is that going to affect their interest rate policies going forward. So that's coming on Thursday, and that will be something that the market will be looking out for closely. So that pretty much wraps it up for the week. So in terms of today's session, I guess digestion of what's occurred from that weekend news and also this latest inflation data. Just looking at Bavaria, Brandenburg, some of the other states have come in and they're not quite as punchy as Saxony. Well, Hesse is though 2.4% against previous 1.9%. Brandenburg and Bavaria the same as previous, both at 1.7% year on year. But interesting things I'll be looking at today. Cable, I actually think that what's happened at the weekend, I'm looking at it more, not so much in the FX markets at dollar in regards to Trump, and I'm expecting dollar weakness. What I'm actually expecting is cable weakness on the back of, I think that this makes, now that the relationship that's been formed between Theresa May and Trump at the end of the weekend, this makes it politically difficult for now Theresa May to manage domestically heading into what are Article 50 discussions happening in Parliament this week, and then ultimately the negotiations with Europe, given the fact that I think her aligning with Trump has somewhat backfired by the fact that Trump and his play on this immigration angle, which has developed over the weekend. Okay, guys, going to leave it at that. So enjoy your day. Guys who've transitioned over now to the live markets, don't feel a pressing need to jump in. It's just your first day into the marketplace, so maybe have some patience. But nothing has changed. Your strategies remain in place, the same as what you were doing. And so just think of it, your mentality should be the same. If you see a clear, defined opportunity, then take it with confidence. Okay, guys, good luck, and have a good session.